Welcome to the deep dive video. This video is where I look through all the charts that I show in the daily video updates, and I pick out the charts that I didn't really cover at all, or at least very much, and I just go through these just to give us some insight as to what's happening. This is being prepared for Monday, March 27th. The first chart is a chart of the VIX. You can't see the VIX on this chart. What I have is a 50-period exponential moving average. This chart tries to discover the range for the VIX. We have static numbers with 20 to the upside and about 12 to the downside to give us our determination if the market is fearful or not fearful. The VIX is also dynamic and it can go into different ranges as we go over time. You can see on this chart from about 2009 into 2012 or 13 or so, we had a range of about 40 to the upside to down around 20 on the downside. Then from 2012 or 13 or so up until the COVID plunge, we had a range basically from 20 to the upside down to 13, 12, or even 11 there for a while. This was more normal for the VIX. Since the COVID plunge, we've had a range of about 27 to 28 on the upside to about 20 on the downside. Currently on the right, we're right at about 22 to 23. The goal for this is to make this chart more dynamic to adjust with what's happening in the market. This next chart measures the RSI against the VIX. When the VIX is going up, that means there's fear. When it's coming down, that means there's more complacency. Right now, we're just a little bit below the midpoint with the RSI. When I really pay attention to this is when we get above 70 to the upside and above 30 to the downside. Another thing we look at is the equity put call ratio. I would include these in each day's video, but the data for this to update is sometimes quite late. By the time I'm doing the video, these charts have not updated yet. With Friday's advance, we saw a little bit of a tick down. What I pay more attention to is the 5-period simple moving average, and it's ticking back up but not giving us an extreme reading. Then we also look at a very long moving average placed on the equity put call ratio. This is 253 periods for a simple moving average. Just to give us an idea, when the market's going down, this moving average will have a tendency to go up and vice versa. It looked like we were topping out and starting to roll over, but then with the recent banking crisis, this has picked up and started going higher again. Another study on the VIX is the correlation between the VIX and the S&P. This is when we run into strange situations with the VIX. When this correlation is really going up, sometimes that can give some support to the S&P 500, but it can also mark the beginning of an uptrend. So we keep a close eye on this. Right now, this chart really isn't telling us all that much. We're just watching the VIX itself. Another chart that's kind of interesting is how far are we from the all-time high? We're down 17.59%. Over on the right, we have the closing value for Friday's session. Then we also look at technical alerts. Now we get these every day. This is just Friday's alerts. Sometimes this list can be really long. On Friday, this list was pretty short, where the Dow went over 32,000. At first, the Nasdaq went below 11.7, then it came back above 11.7, only to go back above 11.8. Another thing we look at are the 5 different main indexes that we follow: the Dow, the S&P, the Nasdaq 100, the small caps, and the mid caps. And then we give them a non-emotional technical score and then rank them from 1st through 5th. Right now, the Qs are in first place, giving us a score of 94. In second place is the S&P at 63.2. In third place are the Diamonds at 54. The mid-caps are in fourth place at 29.5. They've been getting hit hard lately, as have the small caps, coming in last place at 20.9. We're keeping an eye on the small caps right now. At first, it looked like that could be positive because with the large caps really doing well, that's where the growth happens, and that's when the movement of the index happens. But if the small caps and mid caps still suffer some deterioration in their price, we can go too far that way, and that can start to actually drag the whole market down. Some short-term charts that we look at. This is a rainbow chart going from 10 periods up to 50, and we've been chopping around so much, this hasn't really been all that useful. It might look kind of cool with all the different colors, but it's not really giving us a lot of insight. Another indicator that shows up quite a bit on the daily videos is the Williams percent R. This is a short-term indicator to mark upward or downward momentum. We're above the 50 line now and advancing, so we're showing some improvement. But this indicator can go extreme positive or extreme negative quickly and then stay in that area. Another is a look at a double and triple exponential moving average, which is a short-term moving average. When we're above the 20-period moving averages, that's positive. When we're below, that's negative. Currently, we're just a little bit above. Some intermediate-term charts. Here's where we have standard deviation. Is price getting away from its standard or average price? Right now, we're below this moving average with standard deviation chopping sideways with the market. The mass index is not generating a signal right now. The signal that we're looking for is when we go above the red dash line and the blue line, and then when we come back down and cross the red dash line again, that is a signal. Whatever the market's doing at that time, we're looking for some kind of reversal. Connor's RSI works just like a regular RSI. We look for extreme positive or negative readings. Right now we have a positive slant because we're above 50 and advancing. Here's an intermediate term rainbow chart going from 50 periods up to 100 periods. Also not telling us an awful lot. When this is more useful is when we're really going in an uptrend or in a downtrend. Some areas of this rainbow may act as either support when we're going up or resistance as we're going down. The ease of movement, going back just one period to see if we've overdone it from one day to the next. But what I look at most is the 14 period, where this is more negative. We're below this zero line and actually declining. And then on top we have the equi-volume bars trying to take volume and price action together to give you a little more visual insight. The money flow index is another oscillator. When we're above 50 and advancing, that's positive. Well, right now we're negative because we're below 50 and declining. We also look for extreme positive or negative readings. The Sean trend meter is pretty much neutral right now. It's declining a little bit. We really pay attention to this when it gets really high or really low. The boom indicator, this is how far does price get away from the moving average. Right now we're showing a bit of equilibrium. Generally, when we're at 0 and above, that's positive, both above and below. This top chart measures the 50-period moving average, and the bottom chart measures the 200-day moving average. Price has a tendency to always want to come back to the moving average, so we measure how far price is away. RSI, we're just about at 50 with the 14 period. We're showing a little bit more improvement with the 9 period. We also look at this when we get extreme positive or negative. The composite index is supposed to be a trading system. The first signal is generated when we cross one of these lines, and then it's confirmed when it crosses the other line. I tend to use this more like an oscillator. When we're looking extreme positive or negative, you kind of eyeball the midpoint right here. When we're above that, that's more positive. When we're below that, it's negative. The ultimate oscillator, again, looking for extreme positive or negative readings. Right now, we're slightly positive. We're a little bit above 50 and advancing. This is a 20-period simple moving average of the open, high, low, close. Sometimes these can act as resistance when we're going down or support when we're going up. Then we have our moving average study, not giving us any extreme readings now. With the 20, we're looking a little better after going extreme negative. The same thing with the 50. We're turning up slightly with the 200 exponential moving average. The CCM, another oscillator. We have a 14 period and a 20 period. We're looking for extreme positive or negative readings, and where are we in relation to the midpoint. The percent B indicator measures when we go outside of the upper or lower Bollinger Band. And also, when we're above this dash line and advancing, that's more positive. Here's a 50-period double and exponential moving average. I also have the anchored moving average going to the all-time high plotted on here, as well as an anchored moving average from the low set in March 2020. We're right about in the midpoint with the 50-period moving averages, so we're at that equilibrium point. This is another look, kind of the same thing, the anchored high and then anchored lows, to try to give us some areas of support or resistance. Then this is more of a study that I'll probably include in the daily chart. Over the weekend I was looking at this going, we're seeing a negative divergence here. Here's a negative divergence where price was going up and then it came back down and we went back up and price made a higher high, but the BPI made a lower high. That's a negative divergence. Then on the bottom, when we were coming down, the S&P made a low, bounced back up, and then the BPI made a lower low, but price was pretty much sideways. So that's what I call a positive divergence. And this could give some support to the market, but we're a little bit beyond this reading right now. We'll have to see if the market can get some more strength to the upside. Some different charts. The Heikin Ashi is more negative. It has a dark candle. Point and figure, we did have some new X's drawn this past week. Now they've turned black where they had been green, and no new signal is being generated on the point and figure chart. The Renko is also negative with red boxes. The Kigi chart, this is positive but with a negative slant. When these lines are black, that's positive, but when they're going down, that's a negative. The 3-line break is also negative with black bars. And then some long-term charts. Here's a long-term rainbow going from 50 all the way up to 250 periods. Again, we're just seeing pretty much of a jumbled mess. The Special K is a long-term trend oscillator. We're still negative and trying to turn back up, but we are underneath this moving average. So the longer-term trend has been negative since the beginning of 2022. Here's a long-term moving average study. I have the 50 period on here just for reference. What I'm looking at mostly are the 150 and 200. We're showing a little bit of improvement and not giving us an extreme negative reading. Here's a weekly chart of the S&P measuring the very long-term trend. This blue line is the 200-week moving average. We came down to that and tested this level in October and successfully bounced up off of that. What we're watching right now is this 38.2% retracement going from the COVID low to the all-time high. This has been holding up as support right now. If we start to fall, we'll be watching this 38.09 level. Then some broad market measures. The Vixen, which is the VIX for the NASDAQ 100. I can't really use this bar chart right here because of all this icicle looking data. So I follow the line chart down below. And with the update on Friday, we are seeing a decline in the Vixen. And then this is a broader range looking at the advanced decline line for the S&P, which is what we follow, and I have that in each video. But here are the mid caps and the small caps. They're showing a little bit of improvement, but they're still negative overall because we're below these moving averages. We also have a fib retracement for the NASDAQ going from the all-time high to the October low. We didn't get up to this 38.2% retracement. We're seeing a lot more interesting things in the NASDAQ 100. If we still go higher with the NASDAQ, we would be looking at this as potential overhead resistance. Then 2 rate of change charts. Here's a 250 period showing how we're coming back down slightly, and then a longer term look, also 250 periods, showing some weakness. We did come down to the COVID low and bounce up off of that, but now we'll have to see, is the market going to be able to turn and go back up, or are we going to fall even further? Then some of the charts that I may have shown from time to time in the videos. This looks at our possible positive scenarios. When these scenarios come together, we're generally looking at the market bottoming and then going up. We did get an extreme negative reading based on price and volume when we look at the 19-day exponential moving average of the advanced decline ratio. We came up to the midpoint and we're looking a little more positive, but since then we've been falling back based on price as well as volume. Then these are the percent of stocks that are above their 200-day simple moving average. We came almost down to an extreme negative reading and bounced up off of that. It looked like things were really improving in early 2023, but since then we've been falling back. Over this past week, we saw a little bit of a bounce. And then a 10-day average of the S&P 500 highs minus the lows. Also, when we look for an extreme negative reading, the market will often bounce up out of that. When we get to an extreme positive reading, the market may be exhausted at that point. We've been falling back down. Even though we bounced a little bit this past week, this is still negative overall. So thank you. I hope you found this helpful. I hope you use this in conjunction with the other videos that I post. Please feel free to check out the daily videos, as well as the weekly video and the intermarket analysis video. I hope you have a very good day, and I will talk to you in the next video.